Let me start with you, Hitha, because we started today. Retail sales numbers, you had Advance Auto Parts stock went through the roof. Tapestry, I don't like the name, but it's the old Coats, right? It's Coats, it's Kate Spade. Stock had a huge day. Home Depot was down a little bit. That's not unusual, but the internals, again, were absolutely phenomenal. Higher traffic, higher average selling price. I mean, everything that you would want in an environment where people were saying the consumer is dead, brick and mortar is dead.
Average ticket price for Home Depot was $66, and sales went up 8.6%. So we're talking people are now reinvesting in their homes. I mean, this is just an example of what people are doing and how people are feeling better about the economy. Also, you were talking about this wealth study that came out. We're talking about the high earners, but what's really interesting, too, is that they also focus in the study on the Henrys, which are the high earners not rich yet. These are the 26-year-old millennials. About 4.8 million of them.
This is your crew.
Yes, exactly. That is my crew. But these are the people that are going to start investing in the stock market. In fact, millennials are pulling more of their cash out to go into the stock market because they're feeling better about the economy.
You know, Erin, also we saw today the NFIB survey, which is a Small Business Optimism, the second highest level ever. The National Retail Federation hiking their estimates for retail sales for the rest of the year. The market snapping a 4-day losing streak. You know, do you feel like this could be just the beginning? And certainly it does suggest something about America vis-a-vis the rest of the world.
Well, we've been very positive on U.S. stocks for the rest of the world for a long time, and they have been outpacing. One, just the earnings are higher. Whether you're talking small caps, small business, small or large caps, the earnings are just spectacularly, multiple times higher than what we're looking at in China, in Europe, Japan, other developed markets. So, and emerging markets, we just feel are just still too volatile. But another thing particularly when it comes to consumer, I mean, retail sales have just been off the charts. We look 6.6% growth in June. We're getting those other retail numbers tomorrow. And I think that's what's really impressive. And even what's more impressive about Home Depot is that housing starts have been terrible. Right? Because there hasn't been enough supply, prices have gone down. But people are still spending a ton of money on their existing homes. So you're not just spending money for a new home, you're still spending money on your existing home. And that's a great sign because it means you're just going out and buying stuff.
You know, Hadley, it's interesting because it's one thing, to talk these surveys and optimism has been there. In fact, it was there almost instantaneously. We saw small business optimism surge in the immediate aftermath of the November 2016 elections. But now we're seeing it manifest itself into investments by businesses, by consumer spending and this kind of thing. And the question is, after yet another remarkable earnings period, can this continue?
Let's hope so. There's no doubt that a lot of this optimism is the direct result of economic policies like the tax reform that we saw at the end of 2017. And if lawmakers and policymakers want to capitalize on that, they can make the individual income tax cuts permanent. They can address the continuously rising healthcare costs that continue to be, the bane of small business owners' existence. But the optimism that you mentioned, Charles, it is absolutely as high as it's been since 1983. So that's good news as small businesses continue to hire and plan to hire even more. So I think there's positive news in our future as well.
You mentioned healthcare. What can be done there? It feels like all the efforts to completely repeal Obamacare have been exhausted. Are there other measures that can be done on the government level, and how would that impact the economy?
Well, no doubt it's a politically difficult situation, but the Trump administration has taken steps to try to deregulate health insurance. The reason that health insurance costs are so high is there's a lack of competition due to the over-standardization of the plans available on the market. We've got to get back to a more competitive marketplace where small business owners and individuals who buy their own insurance feel like they have more than one option in terms of insurance carrier, because we know that consolidation in the insurance market means bad news for consumers.
Of course, Hitha, we do get the government's retail numbers tomorrow. They've been on a tear as well. One thing I've noticed is people spending money out at restaurants. That's gone up. To me, that's a sign of confidence. But what do you anticipate? What do you see? Because Erin brought up housing. That has been perhaps the only red flag that I've seen so far. Earlier in the week, late last week, Home Depot, Pulte Homes and a whole bunch of them were crushed, right? There have been a lot of inconsistencies there. Home prices are higher. Availability of cash just so. So what should we expect tomorrow, do you think?
I think we can expect positive numbers. What I found really interesting about the National Retail Federation revision of their numbers is that they cited this change in policy, like the tax policy that Hadley was just talking about. All of these different changes in policy is just making that retail
Do you think
consumer.
the tax cuts now are just starting to reveal themselves in people's paychecks to the point where they're comfortable now spending that money?
Absolutely. I think people knew about it. It was coming. I think they were anticipating it, and they knew that it was going to be a buffer to their incomes. So now that it's manifesting in their incomes already, and it's going to start showing up even more so over the next couple months. As we get into the holiday season, you're going to start seeing people spend more.
That Bank of America Merrill Lynch global wealth survey, over 700 wealth managers, 200 some odd self managers, up $750 billion, $750 billion that they manage. And for them to say now the United States, despite the fact that our market has been on a tear, is the best place to invest their money, to me, it's really mind boggling. But some may say, hey, maybe it's a contrarian indicator.
I think in this case, it actually makes sense when you really look at alternatives. We're definitely way ahead when it comes to growth. We've got GDP on a tear, corporate earnings on a tear. Another thing that's really good that can keep this market going for the U.S. is we've actually seen cash levels come down on a corporate level. So we had these huge cash reserves in these large caps, and for 2 quarters they've started coming down. So CapEx, capital expenditures, have been coming. That can keep this going, where we keep seeing this growth in the economy and eventually trickle down as the consumers keep spending. So for me, that's a really good sign that we haven't quite seen the end of this leg yet.
Hadley, in that same survey, these fund managers said that the only major tail risk is trade. And you and I have talked about this trade battle many, many times. We see where these other countries, China, for instance, had some abysmal economic data out. Chinese stocks listed on the U.S. exchanges today were absolutely battered. So we see where it is having a massive impact on those economies already. Are you still concerned it could derail what we're seeing here?
Well, certainly trade policy is the wild card. I do believe the administration is focused on the right domestic economic policy, and when it comes to those trade deals, they've got to find the right balance between what's in the best interest of our country diplomatically and in terms of making those bad actors around the world play by the rules, and also trying to ensure that these negotiations don't ultimately hurt American consumers and producers, because that's the risk that you run with tariffs and other limitations on trade.
Real quick, Erin, from a market point of view, I keep pointing out to people that we've been in a stealth rally since the lows of March and April. A lot of people will be shocked to know the Dow's up like 1,900 points. If we can get a deal this week on Mexico, what does that do for the market? A trade deal.
Definitely. I mean, one, valuation is very fair, so I would say that it would push the markets up just in the short term. Also, we tend to have these summer doldrums, so I see the end of the year where the markets continue to go up. I definitely don't see a massive down leg for September.
All right, ladies, great to see you. Hitha, especially you. It's been too long.
Yeah.
All
Love
right.
being here.
And you look fantastic.
Thank you.
All right. Hey, see you guys all later.